Ever wondered if your bank is quietly making a fortune off you doing absolutely nothing? It's true, they call it convenience, but it's really a multi-billion-dollar business built on our inaction. Today, we're pulling back the curtain on the invisible chains of modern banking and exposing how your financial institution profits from your inertia. This isn't just about a few dollars in fees. It's about a systemic strategy that quietly drains your wealth while you're not looking. By the end of this video, you'll see your bank account in a completely new light. Let's start with what I call the comfort trap. It's that set it and forget it mentality. You open a savings account, set up direct deposit, and you're done. It's easy, right? That's exactly what they want you to think. But while your money is comfortably sleeping in that standard savings account, it's barely earning a thing. We're talking interest rates so low, they're practically zero. Meanwhile, inflation is silently eating away at your purchasing power year after year. Your $100 today will be worth less next year, and the interest your bank pays you doesn't even come close to covering that loss. Why would they do this? Simple. Your bank takes your stagnant cash and invests it for much higher returns. They make a hefty profit on the difference, the spread between what they earn on your money and the tiny fraction they give back to you. Their entire business model relies on your money staying put, not chasing better returns elsewhere. Next up, the fee labyrinth. This is where things get even more frustrating. Banks are masters of creating a maze of fees that slowly chip away at your balance. Have you ever really looked at your statement? You might find monthly maintenance fees just for having an account, or dormancy fees if you don't use it often enough. They're literally charging you for not touching your own money. And let's talk about overdraft protection. It sounds like a helpful safety net, doesn't it? But for banks, it's a massive revenue generator. That $35 fee for a $5 coffee overdraft isn't about covering a cost. It's pure profit. Then there's the fine print on credit cards and loan agreements. Buried in pages of legal jargon are clauses about late payment penalties, cash advance fees, and annual charges that can pop up when you least expect them. Each one is a small, calculated drain on your wallet, designed to be just small enough that you might not notice or complain. But add them all up, and you're funding the bank's bottom line. In our digital age, this has all been wrapped up in a beautiful, user-friendly package. We have these amazing banking apps on our phones. We can see our balance, transfer money, and pay bills with a few taps. It feels like we're in total control. But this is the digital illusion. These apps are designed to encourage passive money management, not active optimization. They make it easy to see your money, but not so easy to see how little it's actually growing. The psychological comfort of seeing your balance at a glance masks the deeper financial inefficiencies. You feel secure because the app is slick and the process is smooth. And all that data you're generating? Banks are analyzing every transaction. They know your spending habits, your income, and your savings patterns. They use this data to cross-sell you products. You might get an offer for their credit card, a personal loan, or a mortgage, but are these products truly the best fit for you, or are they just the most profitable ones for the bank? More often than not, it's the latter. Convenience keeps you in their ecosystem, where they can continue to profit from you in more and more ways. So, what does this inertia really cost you? Let's talk numbers. As of early 2026, a typical savings account might offer you a pathetic 0.1% interest. Meanwhile, inflation is running closer to 3%. In the same market, high-yield savings accounts, which are just as safe and easy to use, could be offering 4% or even 5%. Let's say you have $20,000 sitting in a standard savings account. In 1 year, you'd earn a measly $20. With a high-yield account at 4.5%, you'd earn $900. That's an $880 difference. Now add in a few $100s in avoidable fees you didn't notice throughout the year. Your opportunity cost is now over $1,000. And that's just 1 year. Think about the compounding effect over 5, 10, or 20 years. The money you're leaving on the table is staggering. It's the difference between a comfortable retirement and just scraping by. The stark reality is that while your financial growth flatlines, your bank is reporting record profits built on the back of your lost opportunity. But here's the good news. You can break free. Reclaiming your financial power is easier than you think, and it starts today. First, become a detective. Grab your last 3 bank statements and a highlighter. Go through them line by line and highlight every single fee you were charged. Monthly service, overdraft, ATM withdrawal, anything. See how much it adds up to. Next, check your interest rate. If it starts with 0 point something, you are losing money. The second step is to take action. The world of finance is no longer controlled by a few big names. Research high-yield savings accounts online. These are typically offered by online banks that have lower overhead and pass those savings on to you. Transferring your funds is usually a simple online process that takes just a few minutes. Don't let the fear of a little paperwork stop you from earning hundreds or thousands more each year. Also, look into challenger banks or credit unions. They often have customer-first models with fewer fees and better rates. Finally, don't be afraid to use your voice. Call your current bank. Tell them you've found a better offer elsewhere and ask them to match it or waive your fees. Sometimes, just the threat of you leaving is enough to get them to offer you a better deal. They want to keep your business, but they won't give you a better deal unless you ask for it. The system is designed to benefit from your inaction, but it only works if you let it. By taking these simple, proactive steps, you're not just saving a few bucks. You're fundamentally changing your relationship with money. You're shifting from being a passive customer to an active, empowered owner of your financial future. The invisible chains are only as strong as your willingness to ignore them. It's time to take a closer look, ask the hard questions, and move your money where it will be treated with the respect it deserves. Your future self will thank you for it. Thanks for watching. If you found this helpful, give this video a like and subscribe for more content that puts you back in control of your finances. Let me know in the comments what hidden fees you've discovered. See you next time.